This is the Daily Market Comment by Marios Hadjikyriacos and Maria Pashrodis. Thanks for joining us at XM.com. Global markets continue to trade without a concrete theme. The economic crisis is slowly fading into the rearview mirror as the phenomenal government spending impulse meets successful vaccination programs, and central banks remain committed to keeping the financial system flush with liquidity. Yet this rosy narrative seems to be almost fully baked into the markets. Equities have drifted sideways near record heights for 3 weeks now, with the exception of the tech sector that suffered a setback lately as some stratospheric valuations corrected back to earth. Meanwhile, several currency pairs are stuck near crucial support resistance levels, waiting for a new catalyst. Eurodollar is the epitome of this holding pattern, trapped around the all-important $1.20 region as traders stay on the sidelines ahead of tomorrow's non-farm payrolls data. Whether the British pound manages to break out of its chains will depend in large part on what the Bank of England does today. There's a lot of speculation the Bank of England might dial back the pace of its asset purchases now that the economy looks better, so that the current QE envelope lasts until year-end. At the current pace, it would run out by September. That said, from a risk-reward perspective, it seems more prudent for the Bank of England to wait on taking any major QE decisions, perhaps until June, when it will have a clearer sense of how the economy is actually doing. If the bank holds off, that would argue for a negative reaction in the pound. But even if it does announce a slowdown of QE and the pound shoots higher, that enthusiasm could soon be reined in by political risk. There are local elections across the UK today, and voters in Scotland will also elect their new parliament. If the Scottish National Party wins an outright majority or forms a governing coalition with the Greens, the political battle for a second Scottish independence referendum would commence, creating a new headache for London. Serving as a bellwether for what happens once a central bank takes its foot off the QE pedal, the Canadian dollar hit a fresh 3-year high against the US dollar today, with elevated oil prices playing a role as well. The next risk event for the loonie will be tomorrow's employment data out of Canada. This is today's Daily Market Comment. Thanks for joining us at XM.com.